we thought we might be talking about GameStop today and what Keith Gill was going to do with his position. I don't know if you have any parting thoughts on GME.
You know, Kelly, with GME, everyone was really focused on when the options were going to expire, right? But the fact of the matter with options is that when you're buying options, you really want to focus on what you're paying for the debit. And when you have a substantial profit, the best thing that you can do is take that profit. So, for example, if you're buying an option for $5 and it goes up to $10 or $20, that's something that you should be looking at taking those profits instead of waiting until the option's expiration date, because as options get closer to expiration, most of the time those options are going to decay in value, of course, depending on where the stock trades. But the thing with GameStop was the best moment in time to take profits was when it was up 40% or so.
So we're showing the chart there of the month of June. It had that spike above 40 in the first week, but we think perhaps Gill had sold more like the second week when it was down around the $25 level. So the opportunity for maximum gain was not necessarily the opportunity that he seized.
Well, yes, that's correct. And it's always easy to go back and, be backseat trader, of course. But, the most important thing with this is to follow momentum and get out of your trade when it loses momentum. So, for example, with GameStop, we saw fantastic momentum to the upside. There was a lot of short covering, but when that short covering stops and when the stock gaps down and it starts to break, that's the moment in time where you want to come in and take profits instead of waiting until you get down to the wire.
Yeah, and it appears that's what he did. Danielle, thanks for joining us today. Appreciate it. Have a great weekend.
Thank you.
Danielle Shea.
I think what Keith did with his June 21st options is remarkable. At one point, his position in GME was hovering around $1 billion in value, and instead of taking profits and moving on, he decided to simply increase his stake in GameStop instead. Whatever you may think about Keith, you cannot deny that he has conviction in his thesis. I saw some people questioning why Keith didn't just take profits on his call options when GME was over $40 per share. But if you remember, that was when everyone was preparing for his first live stream in 3 years, and you can guarantee that just about every regulator and financial media pundit were watching him like hawks. If he had sold anything leading up to his live stream, he would have incurred extreme scrutiny from the financial press and possibly from regulators as well. As it stands now, Keith is the 4th largest stakeholder in GameStop and the 2nd largest individual shareholder, second only to GameStop CEO Ryan Cohen. As for GameStop, the company currently has roughly $4 billion of cash, and according to Ryan Cohen, they intend to reduce the number of GameStop stores, cut costs, and offer an expanded assortment of high-value items that fit into GameStop's trade-in model. GameStop is now offering higher-value collectibles such as graded Pokemon and sports cards, unique controllers, and other physical items that are difficult to find at other retailers. Considering GameStop is pushing hard into the collectibles market, I'm curious to see if they relaunch the GameStop NFT marketplace, since now the SEC seems to be taking a much more favorable stance toward Ethereum than they were back when GameStop discontinued the marketplace due to regulatory uncertainty. As I mentioned in a previous video, GameStop has a job listing for a Director of Global Treasury. Duties for this position include reviewing investment opportunities and advising on opportunities in line with investment policy. So perhaps that is a clue as to what GameStop intends to do with some of the recently raised capital. I think it is very doable for GameStop to invest a portion of the capital, and then the gains from those investments could help offset any net losses in the quarters ahead. Keep in mind that GameStop's losses have narrowed significantly over the past few years, and they don't have any debt now other than a single low-interest loan associated with the French government's response to the pandemic. If GameStop plays their cards right and invests a portion of their capital in the right place, then it's very plausible that that could create a scenario where the profit from said investments could offset the company's narrow losses, netting GameStop a slight profit each quarter. And this would provide the solid foundation GameStop needs for the board to then have the confidence to transform the business in a meaningful way. As I've said previously, once GameStop is consistently profitable quarter after quarter, then that is when they should focus on driving revenue growth in new and innovative ways. They've gone about this in the correct order, in my opinion. They've reduced costs substantially, they've gotten rid of debt, and now we're at the point where the company's losses have narrowed significantly. Now they just need to achieve profitability consistently quarter after quarter, and once they do that, then it will make sense for the company to transform its business model in a meaningful way. Now about the financial markets. Regardless of what you may think of GameStop or any other given company, the reality is that there are serious problems that plague the financial markets. And these problems don't just affect GameStop, they affect thousands of securities, they impact the entire market. So as I often say, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.